Hello. How's it going, guys? How are you, Cedar?
Good. How are you, DeCruz?
Good, good. Sorry I'm a couple late here. I
Oh,
was on
yeah,
the
no,
phone.
all good.
Phone call that lasted a little longer than I wanted it to. We're here now.
Yeah, totally. All right. Well, we're FOMC day, so I wanted to continue. We had left off 6 and 7 in the 7 guilts in trading psychology that we talked about last week. So wanted to kind of hop into that first. Number 6 is loss aversion. And what it says in this picture is loss aversion refers to people's tendency to prefer suffering huge losses with expectation that the price will come back, and how to avoid it. Make the plan for managing the capital. Everything is profitability. Don't hesitate to cut your losses when guessing wrong. Leave room for mistakes. And that's where trailing stops take all of the, like, you're not making a decision. That the trailing stops there gets triggered, it gets triggered, but it takes out that concept of I have to make this choice. So do you use trailing stops? I don't on my options, but I think most people should, and I definitely do on my futures.
Yeah, I don't really do trailing stops. I remember I would whenever I was learning. And then yeah, whenever for newer traders, I do recommend it, but I do pretty much stick to a pretty hard stop whenever I do use stops. Of course, and I do heavily advise stops, but usually just invalidation points I'll go ahead and sell.
Right.
Trailing stops tend to get triggered a little bit more than I'd like. But
Yeah, you definitely have to be careful with them, and that's why we talk about not oversizing. So
right.
if the stop got triggered at minus 70% on an option, it was because the trade was invalidated. So you have to set it wide enough. And if you're trading, 15, 20% of a portfolio, you can't set it wide enough to handle what those like flexes can be as far as what the market's doing, because then you'll be down too much. Just net out. And then anything else that you have as far as loss aversion? One of the things that like when I just see that statement is that people are so scared to take a loss that they just won't take it, and then it's at zero, right? Because
Right,
like
exactly.
stopping out is I was wrong, and that makes you a bad trader. Yeah, everybody has losses.
Yeah,
Whatever.
so losses, it's definitely part of the game. That takes us back to like what we were talking about last week. It's like 70 to 80, 70, 75% is like really good win rate in the stock market, right? And then that means right there's failure involved. It's up to us to manage that, the failed trades. And, a really good way to look at it, say you buy contracts at 150, right? Contract goes down to like 110, definitely salvageable, right? Contract goes down to 50, it's a little bit harder to salvage that. So you can always just, once play gets invalidated, just simply cut, take what you have left and simply use that, salvage it into another play, that you feel a little bit more confident in, instead of just hoping your play will come back. Because, invalidations do happen, losses do happen. So it's just up to us to just keep those small. And the smaller the better, because then you turn around, you're a little extra patient on your next trade, and then you could easily make that loss back.
And I think it's important to apply that with a lens to especially 0-day options. So something goes against you, you're out of the money now. So I usually trade my 0 days right at the money or just out of the money. And it goes against you. And instead of closing that, then you just add more to an out of the money 0-day option, which is less likely to come back. And they can come back with a vengeance, right? They can be significant, but it would be in most instances until you're really consistent as far as, long-term profitability over a year or longer, to better to just close the position and reposition, as long as your trade thesis has not been invalidated, closer to the money, so that if it continues to go down, you're not like all of a sudden now that option's not moving at all because it's so far out of the money, but you keep adding to it because you have to be right or want to be right.
Exactly. And just, accept the loss, save that capital and for another trade and just re-enter, or, you have your re-entry point, and then maybe just with a little bit more confirmation next time, and then
Right.
easily make that loss back. And yeah, 0 days it's really hard to, average in, and it's just easiest to, just accept the loss and just re-enter, just invalid, boom, get out. You still, you still save that cash for, another entry, and then boom, you re-enter with more confirmation and you make that loss back. And if you manage it correctly, then you make that loss back and more. So
Exactly.
just think like that, and then it's like, boom, the trade didn't even exist. Like, just keep it manageable to where it won't really like matter, right?
And if you're thinking, okay, I'm in a smaller portfolio, I took the 5% position. So let's say a $5,000 portfolio, and I put $250 in a trade, and we're out of the money by $3, $4, $5 now. Rather than putting an additional $250, so another 5%, taking the your basis in at 500, there's a chance that option's not going to be moving. But if you exit it and deploy that same money that you would have averaged in with, which is not an average in, that's a add to, right? That's an average down or whatever.
Right, average down. Yep.
Yeah, and you would be probably better served in almost, I'm going to say 90% of the time, to be in another position closer to the money, as long as your thesis is still sound. So
Absolutely.
man, throwing good money after bad is what Thor says.
Yep. There's a lot of times where the play will be quickly invalidated. I'll be like, oh, well, just, take like a quick loss. And, like 5-10 minutes later, you're like, wow, like I could, I have a lot more confirmation here. Now I could buy these calls for this price. And I just saw, how much they moved, and you're kind of just watching the chain, right? While you're waiting for an entry. And you get a really primed entry, just with quick invalidation, just accepting your loss right away. And, and not too quick, of course, right? You have to actually have like a set, like, okay, well, if I'm taking this trade off of a VWAP break, so that breakdown of VWAP could be a, stop loss. Or say you have, like a 14 EMA right under, you could be, okay, we'll break under 14 EMA and VWAP. But, you can't find yourself kind of finding things. Like once it breaks, it's done. Don't be like, okay, well, we also have support down here, because then you're just going to keep finding yourself kind of trailing and looking for reasons, right? But it's just best to just, okay, VWAP, breakdown, I sell, and then break back above, and we might get re-entry. And then maybe this time we'll look at, another confirmation point for you. So yeah, just get more confirmation.
For sure. And that's that whole confirmation bias. Once you're already in the trade, your IQ drops by like 20 points. So if you're pretty smart to begin with, once the money's on the line, the IQ is like down a couple notches, and you're not thinking as clearly until you've done it for a very long time. So you just kind of have to like really pay attention to not looking for that confirmation bias.
Easy way to do this, you guys, journal. You're taking a play, enter the play, you're still watching the chart, write down your TA, or even before while you're waiting an entry, just be like, SPY, you have your call set in mind, then your TA would be like, okay, well, break a VWAP and then stop loss, write that out, VWAP, SL VWAP, circle it if you need to, make it noticeable to you, just to keep pounding it in your head and just remind you. Then just over time, you're going to build these positive habits, and they're just going to keep, you're just going to keep getting better and better with risk management over time. It's just all with practice, so it's just not a night and day kind of thing. Just, you got to constantly be reminding yourselves these things.
And that goes back to a lot of people that come into trading are smart, they're great in their field, whether they're a business person or a doctor or, sorry, excuse me, I have to clear my throat there. And they're used to being right, because they know what they do well. And trading is like the polar opposite of that. So we have to like just go into, I don't have to be right. I just have to not be wrong and stick to that, and then just let all those trades run to zero often enough. And I have to make sure that I'm when I am staying in a trade, it's because I'm letting a runner run or letting the position run, as the case may be. And I think of the whole position of when I say runners run, it's not, well, I left one contract out of 15. It's my runner, my position is my runner. And if it's running well, I'm going to let it go. And if it's not, well, okay, all right, take my loss and move on.
Yep.
So then number 7 is overconfidence. A psychological problem occurs when an investor wins continuously. They'll be more subjective and less disciplined. And it says how to avoid it. Always keep a balanced mind. For example, a good psychological investor usually set minimum and maximum profit targets by period, week, month, year. If the lowest goal hasn't been reached, confidence is superfluous. If the highest goal has been reached, the rest should be taken into account. Of course, the goal setting must be consistent with the strategy and not overwhelming. It's impossible to set 100% profit in a week. It is. I've actually never done that, actually. So it has to be something that's attainable. But I think that really does help traders not overtrade to set profit targets. But I also think that it's something, as you become consistent, it will actually limit your income. And a lot of the trade desks really work on their traders from a professional capacity to not be just limiting it off of a profit target. So from a growth perspective, you should be like managing your overtrading by setting profit targets early on. But then that same thing of, if I'm continuing to see the market well and trade well, I'll keep trading, and it's not over trading until I've taken a loss. And then if I've got a string of wins and I take a loss, then I'll step back and go, okay, nope, all right, not giving this back. And the flip side is, like yesterday, if I take a string of losses, I'm just done. And I missed out on opportunity yesterday afternoon, a pretty significant amount, because I stopped, but that was following my rule. It was within the first hour, first hour and 15 minutes. If that happens, my penalty for not stepping back earlier is that I'm done trading for the day. And it's self-imposed penalty, but it has to be because we are our own risk managers.
Oh yeah, I'm actually on it's funny that you're saying that, because now I'm on kind of like my self-imposing penalty of trading bad yesterday and having a bad swing. Now I'm sitting out until after FOMC.
Right.
I'm in my timeout corner right here, right? It's like, okay, no more trading, buddy. You're kind of seeing things wrong right now, just for the time being, just wait.
And I had 2 losses
more patient
this morning, and I was like, all right, if this one doesn't go, I'm done trading, maybe until really probably, honestly, Friday, if that would have, that next trade wouldn't have worked. And it worked well. So you can't let it shake your confidence, but you also have to be responsible to yourself and be like, all right, obviously I'm not seeing it. And that's totally fine. It happens to everyone. Anything else with overconfidence that comes to mind that you wish you would have known as a newer trader?
Definitely. Whenever I first started trading, I didn't really have like a really kind of set goal. So I do really like that, like kind of like set goal in mind, because I would kind of just, even on the red days, when it rained, it poured sometimes, that I wish I would have, had the same psychology I do now. It's like, if you have one red trade, just, hey, sit out. There's gonna be plenty of other trades. It's just, you can't get ahead of yourself right now. Just kind of keep that, just keep that discipline and kind of, remain humble, because if you're not humble, the stock market will definitely make you humble.
The stock market will show whatever problem you have in a glaring, obvious, impulse control.
You don't believe me? Then look at 9:30 yesterday.
Right.
We were at 5 RSI. I tried to catch that knife, and it's still.
Oh yes, no, I tried it 3 times, and it was like, okay, clearly. I have no idea what those are.
That's when you're just like, nope, I'm out.
Exactly.
Yeah, but you got to stay humble, I guess.
And I think what comes to mind for me is the worst possible thing that could possibly happen. I say that word a lot, possibly. Is for a newer trader to have a nice set of wins at the beginning, or like one big just monster, just hit it out of the park, because then you're
portfolio maker.
Oh yeah. And then you give it all back. It's all going to come. And probably then more. So it's actually better luck, and it doesn't feel like it when you're a newer trader, but it's better luck to have some losses so that you can understand that this is not easy. Like, it's not easy, and I don't care what anybody tells you. Nobody is born a great trader. Nobody's born understanding how to trade.
No.
There are some that pick it up
Absolutely.
quicker and learn those lessons faster, but that's better that you lose early or you'll keep losing after in a little series of wins or one big portfolio maker kind of win. You'll just keep losing. And then it takes that lesson way harder to set in, I think.
Yeah, absolutely. I was reading a question you got asked here in Market Talk.
Okay, so Bullish Bear said, aren't the risk reward all screwed up on the futures trades? You're taking a 5 to 6 point profit and a 9 to 10 point loss on a trade. So I don't trade based off of what that percentage or what that dollar amount is in a trade. I trade level to level, and I'll have some trades that are 35 points. I'll have some trades that are 15 points. I really am not big on a couple point trade. I'll take it if the trade looks like it's being invalidated. But over time, if you look at a 70% win rate, it's still going to be, there's going to be those that are home runs that are bigger moves, much larger than a 10 point loss, much larger over and over again. And once we get the bot tracking the statistics properly on futures, I think that will be a little easier to see. But one day doesn't make a trading day, 1 month doesn't make a trading year. And you have to look at it from that perspective. And if I would have held it for more than 10 points, it would have been invalidated already. And now I would be back to, well, I would only be up 4 points instead of, right? So you don't want to hold on to it just because the other one was a loser. If I have to chip away at that and make up that one loss over a couple of trades based on levels, not based on like, I need to make up the money because I don't care. Like it'll make up. I'm not worried about that at all. It's level to level, period, not trading a P&L.
Yeah, I like that as well. Trading P&Ls have in the past, whenever I was learning and kind of experimenting and, trying different things, looking at my contracts, that would shake me out more, like a lot. And it makes sense too. Just think about what I'm about to say. Looking at my contracts would shake me out a lot more than looking at the charts.
Oh, for
that
sure.
makes sense, right?
Yep.
Yeah, the charts don't lie. Okay, your P&L, that's where you start to get emotional. You see you're losing money. So your human instincts kick in. You're like, oh, I don't like this. This isn't good. Like, oh no, right? You see a negative, you see red. Oh no, right? No, it's look at the chart. That's why it's really key to have a plan for your play. Right? You trade the plan. You just got to have, you might have a bad entry, right? You could have had a better entry, but you do have to keep that plan in mind, and you have to trade that plan because a lot of the time, there is that, the kind of emotional stop out right there because you see you're losing money and you kind of shake yourself out of the play, and then you say, oh yeah, I sold, and then the play actually ended up going green, right? And then I see that I don't know how many times a day, and then it could be, it might be because you guys are looking at P&L. Just let the charts play out and then trust yourselves, and that's how you build confidence up over time as well.
Exactly. So Bullish Bear said, so then we're also getting out at levels and not waiting for a trailing stop. I usually don't, I shouldn't say usually. I'm going to say I let a trailing stop trigger probably 20% of the time or less on futures. Usually I'll stop myself out sooner, but sometimes I also want it there. So I've got that cushion of as long as the TA is still there. Once TA is invalidated, then it doesn't, unless I just couldn't get to the trade to close it. It's my emergency insurance policy. So are you going to get into trading futures? You're talking about?
Yeah, no, I definitely want to. I'm about to go back home this week sometime, probably next week sometime. I have a wedding back in New Mexico on the 13th. So I'll probably be back in town the 11th through maybe the 15th, just a quick weekend trip. And then after that, I am looking to do futures a little bit more than say, I think I'm going to invest into a futures account.
Nice. I think you'll like it.
More so than a challenge.
Oh, yeah.
I was kind of I was either, going to do a 5-10K challenge or, put that into futures, start trading futures. I do like futures here. I think I will as well. But then the thing with futures, I'm going to be sitting here trading for 12 hours a day.
Oh, you have to be careful. That's actually why I stopped trading years ago. It's because I was literally in front of a chart 20 hours a day, and I had little kids. And
and my back's going to start, permanently.
All of a sudden I'm like, yeah, why am my back, my knees hurting? I don't know. And it was too obsessive. So I actually stopped and just did options for a long time. But then I guess it's been about 15 months now. I started seeing that we were moving back into that type of market where moves are happening overnight, and you've got to adapt. Like being a trader is adaptability.
You do.
And I realized like we were having consolidation days during regular trading hours, and then extended trading hours where all the moves. And I'm like, all right, we're going back to it, but I'm just going to a little more mature at this point, right? Like I can say, all right, I'm done. I'm closing my
trade here and there.
But you don't have little kids at home, so
Yeah, and then I'm going to kind of be like, it's going to be new to me, so I'm going to be like really into it, I feel like. So I just got to keep that in mind. It'll be nice. It'll be nice.
Nice.
My girlfriend's going to be like, I never see you anymore. Don't worry. It's really good. See you in the future if this works.
All right. So that was really what I had as far as covering for the loss aversion and the overconfidence. And I really, when I first saw this graphic, the first thing I thought when I saw loss aversion before I read it, I really thought that was going to be more in relation to after you've taken a series of losses where you're just like in so much pain mentally, where you just don't even want to trade. You're scared to take a trade. So was kind of surprised not to see that, but I think that that's something that all of us have been through, where after you just get punched in the face so many times, or I call it the trip to the spanking machine.
Yeah.
I think most people are like, I'm scared to trade. And I hear that over and over. Yeah. And
it makes sense.
Like, it just keeps happening.
And then the doubts start coming in and
right, what am I even doing? And it's important at that point to step back, not for a day, but I would say for a couple of weeks.
Oh yeah.
And maybe that's not trading at all, where you just literally just don't trade.
Mental.
And when you come back, paper trade a little bit, build up your confidence. Don't just go straight back to money, because it always goes back to that emotion around money. And it can definitely, I think it's what stops a lot of people from trading as a profession or as an additional source of income, because they just, so many hits. And it doesn't really matter how many times you get hit. It's how many you get up one more time and you get knocked down. And that's that, like if you get hit and knocked down 9 times, you get up 10, you're still successful. And that's from like boxing or whatever, but it's still the same idea, where each time you get up, you get smarter, or you should get smarter. You should be able to step back in and like look at that from a journaling perspective and go, what did I do wrong here? Is it something that this is a repeat thing for me? Was I distracted by something?
Lessons.
Exactly. They're mistakes if you don't learn from them. They're lessons if you do.
Yep, exactly. And then, if you to prevent this, you have to realize what, you're doing wrong. And that's why we kind of preach, I preach anyways, and I'm sure you would as well agree with journaling. So journaling is, it's an easy way to spot out what where you're going wrong. Whenever we're on a trade, we might be, thinking about too much, and it's hard to kind of pinpoint where we're, where or what is going wrong, right? So if you have it on a journal, then you can kind of be like, oh wow, I've noticed this pattern here at 10:30.
I keep doing this.
Like 4 times out of 8 trades, they're not good. So how do you fix that? Simply either don't trade at 10:30, or look in depth and see where you're going wrong there. Maybe just be a little bit more patient. And every day at 10:30, they're like, hey, whoa, it's 10:30. Maybe just be a little bit more patient here. Just adjust kind of accordingly. You'll see a lot on paper.
All goes back to journaling, I think. That's that introspection, that self-reflection that no one else is going to give you. Like I try to give as much tough love as I can, as far as what I see people making as repeat mistakes. But it's going to boil back to your ability to manage yourself, to manage your emotions, to have good enough self-control that you're not blowing up your business, essentially, right? You're literally, that's like, if we think about cost of doing business, that's price of contracts, there are some losses. Like a loss is a cost of doing business. That's like my gym. I don't go, look, I'm a great trainer. Everyone should show up and hang out with me. And, there's nothing to work out with. There's no people because I didn't put any ads in. It takes money to put the space in the gym, like to put the equipment in the gym, to run some ads. to hire staff, or even if you're not hiring staff, you're still spending money equipping the facility. That's not a loss of money. That's an investment of capital working towards development and growth, which is the same idea behind managing those losses. It's development and growth, and you have to look at it the exact same way from a business perspective.
Absolutely.
All right, well, we're coming up on 12:30, so lunchtime in the markets definitely slowing down. Had a little more volatility this morning than I thought we were going to. Usually pre-FOMC is pretty mellow, but we'll see what FOMC brings, and then we'll see you guys on the trading floor.
Yeah. Thank you guys for attending, and
Yeah,
always nice talking to you, Cedar.
great talking with you, and we'll see you next week.
Yep. See you next week. Have a good
Thank you,
one, guys.
Cedar and Chris.
You're welcome.
Hey, what's
Thanks,
up,
guys.
Ghost? Yeah.
Hey,